Meta spent billions of dollars and 3 years building Libra, a global payments blockchain. Political pressure from Washington killed it completely. The asset sold for 182 million, and most people assumed that the technology died with the project. Two of the engineers who built it thought differently, however. They took the open source code, raised $350 million from the biggest names in venture capital, and launched a chain that today holds BlackRock's institutional fund, Franklin Templeton's money market product, and what else? Over $1 billion in stablecoins. The token is down 95% from its all-time high, hardly ever talked about in our crypto circles, and it may just be undervalued. My favorite kind of crypto tokens, actually. I'm talking about Aptos, and in this video, I'll guide you through the origins of the product, the tech coming straight out of the Meta offices, the overhaul that changed everything in terms of tokenomics, the pitfalls I found and you need to know about, and the 3 scenarios in which you and I possibly retire with Aptos as millionaires. So let's get into it. This is not financial advice, always do your own research. In 2019, Facebook announced its most ambitious project to date, a global payments blockchain called Libra, later renamed Diem. The goal was simple: let billions of people send money across borders instantly and cheaply. They assembled over 300 engineers, attracted partners like MasterCard, PayPal, and Visa, and threw billions at the problem. Then Washington came knocking, pushed back hard. Senators grilled Facebook executives. Regulators pressured every bank involved. One by one, the big partners just dropped out. By January 2022, the project was dead. The assets were sold to Silvergate Bank for 182 million, and the dream was shelved. But 2 people from that team weren't ready to walk away, not just yet. So, Mo Sheikh had led strategic partnerships at Meta's Novi digital wallet, and Avery Ching had spent over a decade at Meta as the lead engineer behind the Diem blockchain itself. They had one conviction: the technology they built was genuinely world-class, and the problem was never the code, but the company holding it. In December 2021, they co-founded Aptos Labs. In March 2022, they raised $200 million from A16Z, Tiger Global, and Multicoin Capital. 4 months later, just 4 months, another 150 million led by FTX Ventures and Jump Crypto. And so, the mainnet launched in October 2022. The chain itself runs on Move, a programming language originally built at Meta for Diem. It uses a parallel execution engine that processes multiple transactions at the same time instead of just one by one. Block time is 41 milliseconds and 160,000 transactions per second. The network has maintained almost like 99.99% uptime with zero, and I mean zero, major exploits since launch. And well, in December 2024, Mo Sheikh eventually stepped down as CEO and Avery Ching took over. That's the quick overview on how Aptos started out. But what interesting is happening nowadays? We'll find out by the end of this video. Today, APT, the token, trades at approximately 93 cents with a market cap around $770 million, and it smells like a good opportunity. Let's go a bit deeper and see what's with the Aptos tokenomics. Look, when the project launched, it had no hard limit on how many tokens could ever exist. Validators earned staking rewards of around 5% annually, and new tokens kept entering the market with no ceiling at sight. For long-term holders, that was a constant headwind. That changed just this year on February 19th when the Aptos Foundation proposed a complete overhaul. The governance vote closed on March 1st and the required quorum was 35%. Well, it ended with 335 million APT in favor and just 1,500 against. That tells you how convinced the community was, really. Here's what changed. A hard supply cap of 2.1 billion APT was set, meaning no new tokens can ever be minted beyond that number. Annual staking rewards were cut in half from 5.19% down to 2.6%. Gas fees were raised tenfold, and 100% of all transaction fees are now permanently burned and removed from circulation. The foundation also locked 210 million of its own APT tokens into staking, thereby removing roughly 18% of circulating supply from ever being sold. What's more, future ecosystem grants will now be given to projects that hit specific targets. That basically means no more free money flowing into the market. Currently, about 819 million APT are in circulation, which is just 39% of the hard cap. If we look at the FDV, it sits around $2 billion, with the staking yield today at approximately 2.6%. One important date to mark in your calendar, guys. 11th of October 2026. That's when the 4-year vesting period for early investors and core contributors ends, after which the annual token unlocks drop by roughly 60%. The way I see it, the supply picture gets significantly clearer from that point forward. Here's what the chain is doing right now and what its growth actually looks like. On the institutional side, the numbers are genuinely hard to ignore. I mean, I'm quite impressed with these. And see what I'm talking about. Real-world assets on Aptos have crossed $1.2 billion, with BlackRock, Franklin Templeton, and Apollo Global all deployed on the network. Just think about that for a moment. BlackRock chose Aptos as the only non-EVM chain to host its USD institutional digital liquidity fund. To put that simply, out of every blockchain that isn't Ethereum compatible, BlackRock picked just one, Aptos. Speaks for itself, really. The stablecoin market cap on the network has grown nearly tenfold since late 2024, hitting an all-time high of $1.93 billion. On the technology side, the Shardines upgrade demonstrated 1 million transactions per second in a publicly verifiable benchmark using real Aptos code. The open source results are published on the interwebs, so go and check it out. Anybody can do it, actually. Even after a tenfold increase in gas fees as part of the 2026 tokenomics overhaul, a stable coin transfer on Aptos still costs just a tiny fraction of a cent, and much less than what the same transaction costs on Ethereum and Solana. Moreover, the Aptos network has processed over 5.4 billion lifetime transactions. Now, the honest truth, the honest picture on the DeFi TVL. It currently sits around $242 million, which is well below the 1 billion peak we saw in late 2024. That is the retail DeFi side of the chain contracting. But the institutional side, stablecoins, RWAs, tokenized funds, is growing in the opposite direction. It seems to me that Aptos is increasingly looking less like a retail DeFi chain and more like institutional financial infrastructure. And whether the market eventually prices that differently is a good question to ask. We're approaching the Millionaire math scenarios, but before we get there, you have to understand the risks about Aptos. The first is the supply pressure. Around 1.28 billion APT tokens are still locked and will enter circulation over time. Monthly unlocks continue, and the October 2026 cliff, when early investors' vesting actually ends, could create short-term selling pressure before the 60% reduction actually kicks in. Demand has to absorb that supply for the price to move. The second is the risk of competition. Aptos is fighting for the same users as Solana, which has deeper liquidity, a larger developer community, and far stronger brand recognition. In fact, props to the Solana community, really, because I love the guys and I actually love being part of that group myself. What else? Sui uses the same move language and targets the exact same developer base. So, Aptos being technically superior has not been enough to close the gap to either of these projects I mentioned. On to the third risk, which is the price versus fundamentals problem. APT fell roughly 95% from its all-time high, while some on-chain metrics were hitting records. The market has not really rewarded the fundamentals, and that gap can close in either direction with no guarantee of timing, guys. And finally, the risk of governance. See, the hard supply was passed through community governance, sure, but it can also technically be changed the same way. It is not permanently locked in the way Bitcoin's supply is, for example. So just keep that in mind. Now, as we move into the millionaire math scenarios, I want to lay out the context of the price performance of Aptos. Here's a bit of a historical look. APT launched in October 2022 at around $8. Within 2 months, it crashed to an all-time low of $3, which was late December 2022. Then, in less than a month, it surged to its all-time high of $19.19 in January 2023. That move, at that time, was driven by NFT excitement and early ecosystem momentum. So it nearly reached those levels again in March 2024 as it hit around $18 during the broader bull market. Since then, however, it has been in a prolonged downtrend, falling back to a new all-time low of 80 cents in February 2026. Today, it trades around 93 cents, and that to me makes it a crypto asset worth exploring, to say the least. Alright, we'll use 93 cents as our reference price, and here comes the first millionaire scenario. The bear case, the least optimistic, spells $5 per APT, which is nearly 5.5x from today. At $5, the fully diluted valuation is roughly $10.5 billion. And so, to hit that 1 million, snatch 200,000 APT tokens today for about $186,000. Not for everybody, I know. That's why we move on to the second, the base case, at $10 per Aptos token. Nearly 11x, and APT reclaims half its prior all-time high with a fully diluted valuation of $21 billion. You would need 100k APT costing around $93,000 today. The scenario is achievable if institutional momentum continues. And lastly, the bull case is $20 per APT, bringing about 21.5x from current levels. The price simply returns to its prior all-time high, and the fully diluted valuation amounts to $42 billion. You would need 50,000 APT, which will set you back about $46,500 today. The key differences from the previous time are these. When APT last hit $20, BlackRock wasn't on the network, the tokenomics hadn't been reformed, and Shardines didn't exist at all. So, to reiterate, Meta's blockchain dream was shut down by Washington in 2022. The two engineers, however, who built Libra, or Diem, or whatever it's called now, took the code, raised hundreds of millions, attracted BlackRock, Franklin Templeton, and built one of the fastest and cheapest layer 1s ever to be benchmarked. That's Aptos. But is it the institutional blockchain that the market hasn't priced in yet? Or is it another technically excellent chain that never manages to close the gap with the leaders like Solana? A bit of a gamble, I admit, but also an opportunity not to be ignored, and that's why we've covered it today. Now hit me with your thoughts and price targets in the comments below, and let's see which way the community actually is leaning. I'm personally curious to know. And so, if you found this Aptos analysis quite interesting, then I encourage you to press the like button and to subscribe to the airdrops.com channel. I'm Stan, and I thank you for watching today. I'll see you next time. Ciao.